Okay guys, now we're going to take this to a 1 minute chart, and this is the template I'm going to work off of. But before we get into all the detail here, it's easy to lose track of what's important here when we get so focused on the next bar, and what you just, sometimes I think it's worthwhile to kind of step back and look at these pieces individually so that you don't lose track of the significance of what they're telling you. So just to make my point here. Oh, what have I got here? Again, I got 5-6 days here. This is RTH only, just to avoid the scroll through the overnight. But this is a 21 McGinley. Now, I know there's nothing, and I mean nothing, more annoying in trading education than someone talking you through hindsight trading. But it's not really what I'm trying to do. I'm not trying to say, oh, look here, sell it here and you buy it here. I'm just trying to encourage you to be mindful of when it's really talking to you. I mean, this is Thursday. I mean, okay, so we got a lot of chop going on here. This wasn't particularly good start to the day, but then what was that? There was an auction here that didn't go well, and some news triggered this. But look at the McGinley, right? Look at the McGinley on the prior day, going into the start here. This is all the chop. Now, look, you wouldn't even want to consider longing it here until here in this case here we had a little change of character here. But after this massive downswing, right, all of a sudden we get higher high, higher low when we get on the other side of the McGinley. And it's the same thing going into Friday. Massive, 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 right? And then here's the little pop. And again, so point not being sell it here, buy it here. The point being, these are real guidelines, and literally a guide as to perhaps which side of the market you want to be on. Of course, price action trading teaches us to entries are best as close as they can be to whether it be a 21 EMA. In our case, we like a McGinley, so they would be very close. Okay. I mean, don't lose track of it is what I'm trying to tell you. Right? Here we're clearly in an uptrend. Let's not be trying to short it. Oh, we got a little red, 2 candles red. Oh, we're shorting it. I know it's easy in hindsight, right? When we're right here and you're looking at that, going, oh, okay, am I buying it? Am I buying it? Oh, wait, am I selling it? It's not so much for entry as in, oh, we crossed, we're red, now I'm selling it. It's more just the guide that it's giving you here. Is there any, God, right? Can the people were trying to buy it here. Look, they're trying to buy it. That's kind of crazy if you ask me, right? I mean, again, when we get too terribly far from it, let's see if I can find, this, because the market kind of stays close to it. For some place where we get too far from it. We really don't, right? We really don't get too far from it, even in these massive days. Not a lot of distance from the 21 McGinley. I mean, this is, maybe that's a little bit of distance, but it tends to be a magnet to the market, right? For whatever reason, right? The algos seem to like it. Back, little wick through. Don't even touch it here until we get here. Yet, I guarantee you there are people trying to pick the bottoms here. Right, had to be, right? So just a reminder here. Now let me add these pieces here one at a time. So bear with me a sec. All right, so all I've done is add our volume indicator, this devil's volume, and I'm color coding the bars based on the volume. So what we're looking for, anything over, this is 1, 3, and 5 standard deviations relative to, in my case, it's 21 period, right? I like the 21 fib number, all those right reasons. So what we really just want to be focusing on is where we see the big bright candle colors here based off of volume. Now, of course, it's always going to be high at the beginning and the end of the day, but as I try and keep those off the chart so we can focus on what we're seeing here when we're this is a decent example here. We're getting big high volume bars here. Right now, I know it looks like it's squished there because again it's tied to all of this that came. But while we're looking at this stuff, these kind of big impulsive candles, really we want to pay attention to, because that's where we get things like fair value gaps. I mean, here's an easy example, right? So we see this is where we get these kind of imbalances, where the market is prone to want to come back and fill in those imbalances, right, or rebalance them. And you see it here as this was I think Thursday, right, as we accelerated down, right, we're getting these massively high volume. We're doing what, 10, 12,000 in 1 minute candles. I mean, this is just a ton of volume coming down here. And then as we come back the other direction, all right, well, here, right, obviously it's going to take some muscle to get on the other side of the McGinley. First thing we have to do is if I do it this way, we have to take out that high, right? So, oh, maybe a low has gone in. We don't touch a high all the way down until this one, right? And then, oh, look what happens next, other side of the McGinley. Right now we're starting to see some signs of some significant volume. Here's between 3 and 5, between 2 and 4. Those are the distinctions we make. But then you see here's another good example here where we have this aggression, right? So we have aggressive selling here. Likely this is market orders here. So if you're looking at a footprint chart, right, you might see some of that, or a delta candle or delta bars. You're going to see that aggression here. But look how quickly that is rejected. Right now we get this is a balance price range in SMC speak, but we get this right coming right after it. So this gets filled in. Now we've got the impulse here after that massive sell-off. Now we start coming back, and the short side, the imbalances, the sell side imbalances are being ignored and filled in, and it's the buy side that are being respected. Right? If I can pull that over. Right now, here again, big candle going up. Can't get to those highs. Interesting, right? And then coming into, actually, was that Thursday, Friday? I can't remember. It doesn't matter, right? So let's take note of this, right? This is pretty much something to watch for every day, right? Here's the opening gap that gets filled. Oh, where do we fill it? Right here, right? So here's the gap fill, right? It's very, very common, right? We pop up, right? So you often will see it down in the overnight, up at the open, and then come back down to fill in the gap, right? So the intention was to drive it lower. Here are those big high volume bars, right? You want to pay attention to those. So of course the idea here is what the reason I do the color coding here and draw your attention to these is because what we want to avoid is all of the rotation, right? Which is what the market does the majority of the time, actually, where we don't have this kind of aggressive movement, right? So so that's why color coding the bars can be helpful, just to draw your attention, because this is the stuff that kills most traders, right? You're trying to force a trade in here when it's not really here. See all the overlap, right? It's just rotation, right? There's no imbalances. There's a couple of big bar here. Oh, there's a little baby one in there. You got one right there, little baby imbalance here, but it's quickly rejected and filled in on the other side. All of this rotation, here's where we start to separate. And here's where we get some distance from the McGinley. Now here we're under, but again, this is very, very difficult to try and trade. So just by color coding some of this can be, okay, well, here's the open, right? Do I have anything really significant happening? Oh, all of a sudden I get this big down candle. Right, what's the volume here? 15,000. 15,000 in 1 minute. That's huge. Right, so what's likely happening, right? We're coming down to fill the gap. Right now, I know, hindsight, I get it. But now the market is starting to open up and reveal at least the short-term intentions are revealed here. Market wants to go down, obviously, right? I mean, big high volume bars, lots of imbalances. These, just out of curiosity here, I guess I can put the fair value gaps on, but I have them off at the moment, right? We can kind of see this come back here. Let's get that a bit more precise. Right, imbalance, right? What? You think that's coincidence? I can assure you it's not, right? So you kind of see the same thing here, right? It's just over and over again. These imbalances, as you see them, right here, we can consider this, right? This little imbalance here, we get a fair value gap, come back, touch it. Now, here's a good example where we talk about trying to enter as close to the McGinley as you can when it's in it's in line with what you're seeing on the chart, right? So the idea that, oh, wow, big drop, heavy volume, we get away from the McGinley, now we're coming back to it to fill in that imbalance at the McGinley, yeah, that would be a trade you might want to consider. Right, McGinley's red, right? We're underneath the McGinley, we're coming back up to fill in that gap, down we go, and we do the same thing here. We don't get an imbalance here, but again, this very high volume should draw your eye to it. So look at the up down, right? So we get, you know, competing versions of it right here. Under the McGinley again. Now we've got distance to it. Now we're coming back to it. Oh, now we're on the other side of it, right? So it's, again, these are just little nuggets of things that you probably are already aware of, but sometimes it just takes someone reminding you, like, wait a minute, right? Okay, when we see this, look at the McGinley here. We're just going sideways. We're on both sides of it, right? Obviously, this is just a big consolidation, right? So what we have here is just the kind of thing you want to try and avoid trading. One, you see in the color here where we have no, this is all just rotation. This is the rotation I'm talking about. You have absolutely no edge here. Well, it's actually, you know, early afternoon. This will just, more people have lost more money trying to trade this than about anything else I can think of, other than the people who try and buy, well, you know, try and pick turns. This rotation kill you, right? So when you see this with a very low volume and we're just overlapping each bar here, McGinley's going sideways, this is the kind of thing you want to avoid. Now maybe you could talk yourself into, you know, some sort of an extreme push like this. You can, and when we get the market structure pivots on here, maybe, right, you can make sense of this as, oh, it looks like they're sweeping some highs here. And how do we know that in hindsight? Well, we'll sweep the highs. Look what comes off of it. Look at the displacement that comes off of it, leaving, I do it this way, leaving this fair value gap, all right, which gets tagged right here, tagged again right here, although if you were using the pivot high of the, you're using the high of the fair value gap, you'd been wicked out here. But if you're using the pivot high, right, you good. And then look at the big, right, what are they doing here? Likely. This is bait for longs. Oh, this probably, you could, we'll just leave it this way, right? We're coming off of that, then big spike down. Look how quickly that's rejected. This is manipulation. That's exactly what's happening here. Suck in the shorts, suck in the longs. Ultimately, right, they take it down. Again, you see the coloring of the bars kind of guide you. All right, let me take that off here, and let's get a full working template on here. We'll start going through some of these with the market structure on. So bear with me 1 second. So this is the full template put together. Now note a couple of changes here. I'm using now our McGinley with a squeeze indicator wrapped around it. So when we enter a squeeze, it'll show up on the McGinley. The devil's volume here that we talked about before earlier. And then I also have down here our zigzag histogram, which identifies a 14 period twice the ATR. So when we get twice the average true range of a 14 period, I'll get I'll get a swing up the other direction and then back the other direction. So it's just a visual way I like to see when the size of the swings are getting smaller, larger, or looking for divergences, as we see here. So and then with the market structure indicator, I have everything turned on. Well, not everything, but I have the fair value gaps and the order blocks turned on, and that's typically how I use it. So as here we're coming in, now this is pre-market. What is this? The 10th, Tuesday, I think. Pre-market here. This is nice little downtrend here before we go into the open. This is very tradable time, right? Really 6 to 8:30, or it can be quite good. Now note the McGinley, right? So we come out of this squeeze, and then well, we get this nice lower low, lower high, lower low, right? All underneath the McGinley. Now here's the break back up that leads to this break of structure here. So some of these are kind of small, but some of them should be, like right now, pretty obvious, right? Oh, okay. Well, here's one last swing before we break up. We come back to it, head down. Oh, I won't do every single one because these don't come out as easily on Ninja. Swing up, head down, right? You could do the same thing. This would be, looks like they would, if you were here, this swing up here gets wicked right here. But what are they doing with that wick? Just filling in the imbalance here, that fair value gap. So down we come. Oh, let's see. So as we go into the day, so here would be the last downswing. I mean, we're getting, this is demonstration, right? I don't know if you're trading at the very open. Some people are. This is actually, we get, this is 10 o'clock before we launch. So here's the downswing that leads to the upswing. So here's the potentially, right, demand here as this is the BIFs, right, taking shorts down here before they take it up, and then we come back in here, fill in that imbalance. So you could see this is potentially, right, if I, oh, can I get this out of here? Well, here, let's just take them off. Right, if we can see here the imbalance here that gets mitigated. Right, and then here would be this, again, I don't know if you're trading at the open, but once we get rolling here, now it doesn't take long, but we start to move pretty quickly. Now first, note that after this nice little downswing and then coming into the upswing here where we get this break of structure to start the day, we start in a squeeze. This is unusual. Start in a squeeze, right? So, and here's the absolute killer rotation that I was talking about earlier that will just destroy anyone who tries to trade that, right? It's just rotation. Note the color of the bars, right? Other than the opening bar, right? We have nothing, we see no colors, right? That's the point of the color coding. You say, okay, well, this is, well, so look at all of the things we're putting in your face here. Number one, bar color. Number two, it's a squeeze, right? There is no edge here. You have no edge, right? Do not try and trade this, right? You'll regret it. But slowly, we start to show signs of now, right? Here comes the launch. So here's the last downswing. I mean, we could, there's potential in here. Let's just assume because of the squeeze and because of the lack of any bullish or biased direction here, this is just chop before we launch, that we would just use the last downswing before we go. So let's just use that, right? Stay consistent. Right now I can't actually see what's coming, but note here as we go off. Now here, this is just to kind of tie some things together. Note the brightest green colors, right? So we're between 3 and 5 standard deviations of volume over 21 periods, right? So this is huge kick in volume, right? It's how do you miss it, right? And then of course it leaves behind these imbalances, these fair value gaps here. So clearly out of this consolidation comes the launch, and then we leave behind, here's the unmitigated, in this case this would be bullish order flow, but it's think of it this way, it's the down, right? This is the down before the up, right? We're just including all of these 1, 2, 3, 4, 5, 6, 7 bars before we launch. So we launch, and then now you want to be careful about some of these where we have just a very, very small retrace here. I mean, I wouldn't ignore it, but these aren't quite big enough. Let's get that underneath there. Does it get mitigated? Partially, right? This one definitely not, right? So this is sitting unmitigated at the moment, right? Now perhaps it'll get mitigated in the future, but as we are now in full launch mode, right? So okay, so here we go, trying to tie a few things together. Look at the McGinley, right? Is there any reason to even be considering selling here? No, but I promise you there's people trying to take the other side of it, right? It's not uncommon, right? It's just that, in fact, I personally, right, so much of what I teach ends up being a result of my own trading biases. God, come off of there. Because I am a natural counter trend trader, so if the market's going up, I'm looking for opportunities instinctively, right? Again, I'm not saying it's right or wrong, but instinctively, I'm looking for the counter trend trade. So by doing things like this, like the color coding, the McGinley in your face, these little retracements, I'm trying to avoid that temptation to say, okay, it's gone too far. It's coming back here. So here you get 1 bar through the McGinley here. Oh, time to sell it. No, that's never what we're saying. But we can look here and use that as an example. So here we've had this pretty substantial rip higher, and now we have some trend line liquidity being created here, and you see partial of that is tapped into, but we see here, and these are 1 minute candles, right? So it gets a little bit trickier with 1 minute, so we're not going to have 100%. Everything's not going to line up perfectly here, but I think what you'll find is that if you start tracking this, more often than not, you're going to see an opportunity with good risk-reward scenario, and perhaps an opportunity to participate in a trade that you might not have spotted earlier. So let's use one here. Okay, so here's a decent one, right? So here's the last down, right? And I've beefed up the size of the fractals just so we can see them pretty clearly. So here's the last downswing before we go up. Now as we come back down, right, what are we doing? We're fully mitigating this. Now we go again, right? Up, 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 up. Here's the break, so you could really use this whole thing. I'm going to pull this over so we could do it this way. right? So from here to here, unmitigated, right? We tap it here. So that's interesting because what I see there is that we're leaving behind unmitigated bullish order flow, right? This is the downswing, the accumulation of shorts here before we launch it higher, and you would anticipate that at some point this will get mitigated, right? So they can take off those shorts. Well, I mean, do I need to even draw it, right? I mean, you see it right here as we come back to the initial balance, right? So here, and you'll note here we get a little chop here as those are offset. Now we've had this massive candle bringing it down here, so it's not surprising that we keep going because this was clearly significant to the market. I can't remember, it's Tuesday, what happened there. But we just carry it forward here. So here's the downswing. We can do it again. You can just do this over and over again. So I want you to just start looking for these. So as I bring this over here, and I can be fancy and put the 50% on it. But here's the downswing before the upswing. So we come tap, tap, tap. We're not getting too far into it. So partially mitigated, right? Partially. Where does it get fully mitigated? Right there. So partial. You can do the same thing, right? Each of these, right? There's things to watch for. Little potential opportunities. Mitigated, no, right? You go again, right? So you're leaving a lot of unmitigated bullish order flow here. Now this one, perhaps, you make the case here that we get mitigated here. Not a lot of traction. Look at the McGinley. Look at the squeezes, right? It's easy to kind of lose sight of it, right? I was about to say it's like being nose blind, right? You can't smell it. But literally, you become blinded to it because you're so caught up in what's happening here. You forget, look, oh, Jesus, do I want to be trading right here in the middle? How long is this squeeze? I almost over an hour. Right, we just squeeze, no edge, just chop, absolute rotation. Yeah, we get a few little higher volume bars here, but this squeeze. Now, the one thing we do know, we know with certainty that we know that from this consolidation comes expansion. So squeeze, expansion. I know you're like, oh come on, man, it can't be that simple. You sure about that? I know we complicate it, but what we're trying to do here is I make things that you can identify. It's like, okay, well, there's an imbalance here, right? So I got to pay attention to that. Here's an imbalance. That doesn't mean if it gets here, oh, long it, right? We 10 lot, right? I'm just saying, let's pay attention to what's happening here, right? Who's in charge here, right? So as we come back, what's happening here? The buy side here, these are being filled in so the market can continue to move higher. So we're filling in the imbalance and we move higher, filling in the imbalance, we move higher. It's over and over again here. Now here's the big drop as it's literally, you can see the rotation as we roll over. It is truly a rollover. Then here's as we come out of the squeeze, here's the expansion, right? From contraction, expansion. So big, right? Big, can't miss it, right? That's the very bright colors for the highest volume bars. I mean, that's 12, 13,000 on a, we got 3 bars in a row here, right? This is huge amount of volume here. 3 bars in a row over 12, that's about $14,000, $14,000 in volume on these 1 minute candles. This is massive volume, right? Relatively speaking, right? I mean, look at the day. Right, relatively speaking, that's the highest volume of the day, and so as we come down here, right, something significant has happened. So look at the huge imbalance that it leaves here. You would think at some point the market's going to want to come back and correct that imbalance, right, or fill in that imbalance if you want to think it that way. Big one, right? So this just goes across. This goes day. I think we go 2 or 3 days before that's filled in. I mean, look at that, right? Waiting. It's just waiting to be filled in. Wait, Jesus, I didn't know I was going to go that far. Holy smokes. Well, look how far before that gets tapped into. Still not there. Now we're there. There's 50% of it. Right, there's the upswing, right? Just now. God, it's still holding. We're into Thursday. Still holding. That's the IB high that day. Right, I mean, this goes for 3-4 days, right? That imbalance really is not filled in. Jeez, now I gotta go. This is why I typically do RTH, so we don't have to do this kind of scrolling. But that's pretty amazing, right? Come back and tap it a little bit. What's happening here, right? We can all kind of see the equal highs here, right? So clearly, I mean, this is not hard to deduce, right? Now, again, I know, God, hard to do this. Ninja is really not designed for this. It's hard to miss that. right? These are just equal highs all being engineered here. So this is just bait, right? It's just screaming, right? Breakout traders, please take it. Like how that worked out for them. Oh, let's see. Here's I guess we could look at this as an here. We could probably do it this way. Here we can come over here again. It's really worthwhile to do this yourself. Right, so here's the last upswing before we get this break of structure. We come back to it, right? Look at the McGinley now, all squeezy in here, right? I'm not so sure you want to be looking for anything in here during that squeeze because you don't know when the expansion is coming, right? Until it's there, right? Now here we come out of it. Look what leads us out. High volume candle. Very high volume candle, but look how quickly that's rejected. So you can just see the rotation here. The market there, it's bulls and bears fighting here, right? This is the IB low, right? So that's not a surprise. Come down here, here's a fair value gap that's getting tapped, right? So there, as it breaks structure, it hits that fair value gap. Then we come back up. So this would have been, well, you could make a case, right? You could probably you could look at it this way, right? All of this up, right? Well, let's bring this over. All of this up before we broke that structure. All of this squeezy, all of that squeezy, right? Down, up, mitigated, back down. Right? Interesting, right? You think, oh, is it really good? Is that really what they're doing? Well, look. Huge, massive dump. Why doesn't it keep going? Right? Well, we're getting to the end of the day. That's the low of the day. Break of structure is, do I have one? I don't think I have one. Okay, so then let's go another. Oh shit! Here we gotta go. This is what I typically will do. RTH. All right, here's the next day. Right, so we still have that the fair value gap, right, has not been fully mitigated. We haven't gotten to the top side of it yet, but we're certainly participating in the midst of it. So, oh god, it's kind of tempting to pull that off here, but I can't because I need all the fair value gaps identified, or I won't be able to see them because I'm back here 3 or 4 days. So I'll just draw a couple in here, and again, the real value will come when you do this yourself. Oh, let's see. Here's a break of structure. No, we don't need to do every single one of them. Here's the pivot. So let's see if I can do it this way. Right. So here's the note here. We're right at the McGinley. So here's the fractal higher. Oh, I got another. There's a break of structure right there, actually, on the IB. So let me take the IB. Oh, let me take that off. All right. So here's the break of structure. So that would be this swing higher. All right. So you could look at. Oh, probably easiest just to do it this way. Right. So here's the up before we go down. Now we come back this direction here. It's not respected, right? So we go up. Note, big high candle. Look at the McGinley, right? We're pushing away from the McGinley with very high volume. So do you want to be sitting here with a limit order to sell that? Not necessarily. I don't know. Easy in hindsight. But perhaps that's one you would take and you get stopped out. But then also note we're in the middle of a squeeze, right? So do you want to even be trading here? We can get clues about direction here, despite the fact that we're in a squeeze, but it just increases. Well, let me rephrase that. It reduces the probability of success in the trade because you don't know which side we're going to. It looks like you're going to come out of it going down, right? Looks like, oh, okay, squeeze must be over. Nope, we're still in a squeeze. This would have been quickly stopped out if you were in this, right? This is the down before the up. Here's the last down. Before, all right, you got here nothing, right? Likely scratch or loser. So as we come out of, here's another squeeze. What happens out of the squeeze, right? So note, right, very high volume bars, right? So you see, and in addition to the high volume, we get, right, as you might anticipate, we get imbalance, right? Fair value gap. So here we go. Here's balanced price here, so we get a fair value gap on the upside that is filled in on the downside and leaves another fair value gap, right? So we get a balanced price range here. So this is as we come back down here. So where's the next break of structure? Again, just trying to walk you through this without boring you to death. Come here. Come on. There we go. Here's a good one. Okay, so here's the break of structure. So here, these up candles here. Now note the McGinley. Note where the squeeze is. Right. See, this is what I mean. You kind of go blind to it. So okay. So this, yeah, that's why I want to draw your attention to this. Okay. So here's a big upswing before we broke the downswing. Pardon me, before we broke structure here. This is all these are this is microstructure breaks, but I want to focus on the big ones. Right. Just so we don't do 100 of these. Right. Here's the upswing. Right. I bring this over. I'm going to do it this way. Oh, it looks like it's broken right here. Okay, so then additionally here, I'm going to just add this to it so we can really identify this, so we can really see that premium and discount. Okay, upswing for the downswing. Right, we get another little one here. We could fuss with that, but let's focus on the bigger one. Tag. Look at that's 50%. Boom, boom. Now what's happening here? Do you think maybe they're running the stops there? Right? The algorithm, right, is taking advantage of the equal highs here. Up. How do we know that? Right? Because it's in real time. You're like, oh, does that look like? How do we know after the fact? Look what comes off of it. Right, boom, boom, boom. Right, big gaps coming down. Right, massive imbalance. And in fact, the candle low is where you get the candle coloring here. It's very surprising here. There's just no one on the other side. But it didn't take a ton of volume to produce that move, which makes you suspect of it. I'm kind of surprised that we don't. It's only on the last candle that we get that big pop in volume. But note here, right? So we can continue to trade this until that breaks. So here's the upswing before we break structure. So you could draw it in again here. So here would be the upswing right now. So as we come into this, now fully mitigated. Now, so the thought being, okay, we're looking for a sell. Well, now look at the McGinley. Are you sure about that? If I bring this over, coming out of the squeeze on the other side of the McGinley. So you got to think twice. Do I want to sell here? Well, I would be looking at this would draw my attention, right? That I've got the potential here for this to be getting mitigated, well, what would your thought be, right? Potentially, this is what's happening, right? We're going to come back here, we're going to mitigate, and then we're going to keep going back down, right? That would be the thought process. Break of structure, retrace, and we carry on, take out these lows, right? You see the equal lows down here, right? The fact that those aren't tapped at that moment is somewhat telling, right? That those are left behind. But okay, right? Let's say you're over here on the hard right edge, and like, what's next? What do I see? Well, first, right? Where's the McGinley? What did we just do? We came out of a squeeze with aggression, right? With volume. Now we're coming back in here. We're still dealing with this unmitigated supply zone up here. This bearish order flow here is not fully mitigated until we get right here and we break structure and go beyond it. Look at the McGinley. Right, so I have to keep saying, I have to say that to myself often when I'm trading. Where's the McGinley? Wait a second. Before I enter the trade, where's the McGinley? What side are we on? Right, so because you don't want to be impulsive, like, oh, there it is, I see it, and then jump into something, and then 2 seconds after you're in, go, oh shit, why am I selling here? Look at the McGinley. Question mark, right? So you look here and you say, oh God, look how perfect that is, but where's the entry? Right, it might be right here. Because, right, let's be realistic, right? Are you going to know to sell it right here? We got one dot squeeze and then we go down because the McGinley's red? Probably not. But here, no, that's more doable. Oh, let's see here if I've got anything else just to make the points here. Well, this would remain. This would be unmitigated. This would be currently unmitigated here throughout the course of the day. So this little downswing, unmitigated here. Where's the next break of structure? It's a good little habit to get into. I think you'll find some trades here. So as we break here, here's the down before the up. We come back. Do we get any mitigation there? Not a lot. Right, fair value gap maybe. Right, look at the McGinley. Right, you want to be selling there? You sure? Right, here's where we finally fill in that imbalance. Big imbalance gets filled in. We're leaving behind lots of unmitigated down here. Oh, now we go into the overnight. All right, let me pause right there. Maybe we'll do one more day.